Hello, everyone, and welcome to the Attachment Point, the Roundtable edition. This is a video recording where we get Brett, my co-host, and I get a guest on, and we just chat a little bit about insurance, a little bit about maybe the Boston Celtics. That's what it's looking like, and whatever our guest wants to talk about. Our guest today is our good friend, Stephen Goldstein. Stephen,
Hey, gentlemen.
how the hell are you?
Good morning,
I'm
buddy.
great. Thanks for having me on, guys.
Stephen, I haven't talked to you since Des Moines, I think. What's going on in your life?
Yeah, it's been, wow, I can't believe it's almost been 3 months. I've been on the road a lot. I've been going around checking out America for the first time in about 8 years.
America.
Yeah, eating a lot of good food, which has been good. Had me needing to get back in the gym as soon as I got back. And just, following the Insurtech happenings, trying to do my part in the ecosystem and just having a good time, man.
Well, what are you seeing? What are your thoughts on Insurtech or things of insurance? You've been writing a lot, so and some really good articles. I'll post some of them on the show notes.
No, I appreciate that.
What's going on in the Insurtech sphere?
Well, it's funny. A few weeks ago, a buddy of mine out in the UK emailed me and said, kind of asked me a question saying, is the hype receding out there? Is it slowing down? And my kind of response to him was like, I think it's pretty much in full swing right now. And you see that, every conference that I went to 8 this first half of the year. Every conference was saying, we have a record number of people here from a record number of countries. And you see battles going from influencers and founders online and social media. You're starting to see a lot more, I'd say, late rounds investing. So we're seeing a lot bigger and larger and later series rounds for the investing front, which I think is quite indicative that people are focusing more on some of the solutions that are really adding value and some of the things that are really doing well in the space. And then you've got some people that are kind of, I guess, the early kind of adopters of saying, well, Insurtech as a word or as a theme is just becoming normal insurance now. So you kind of see that kind of balance coming now, which I think is interesting because even when I first started covering the space, I was also thinking to myself, what is this word? What does it really even mean? It's not even anything when I tell people it, and now I use it pretty much in every single thing that I post. So I just think it's an interesting time right now, and I think you're just seeing that adoption curve and the actual rubber hitting the road with some of these solutions happening, which means that hype cycle is still there, but it's a little bit more meaningful rather than just people talking about it now.
Yeah, we could use the Barry Rabkin definition of Insurtech and just say, if you're a tech company, you're Insurtech. If you take on any risk or do anything that's traditionally insurance oriented, you are not Insurtech. But that might be a little bit too harsh of a definition. I think your definition would be a little bit different.
Well, I don't know. I mean, I liked watching the guy's posts. I like seeing it. I saw something a while back where he said, I'm going to unfriend and unfollow everybody that has Insurtech in their name. And then all of a sudden I had one less connection on my LinkedIn. So
wow, I should check.
Yeah.
I could literally share my screen and we could do this together, but maybe I'm gonna check after this to see if he's still connected with me. That's interesting because I haven't heard of him in a while, so he could have probably unfriended or whatever, unlinked.
He could have unfollowed you. That could have been the cordial way. Just no
cordial way.
Yeah.
But to that extent, like, the guy sticks to his guns, right? He doesn't waver. He doesn't, he's got his view. He's very consistent with it. And you got to respect that as well.
Yeah.
So,
Brett.
So I think, I just think it's interesting what Steven's seeing there. Sorry to just kind of jam on in there.
No. We can jam any way we want. We can just talk about this if you guys want to.
Yeah.
As long as you don't start focusing on the Celtics,
wherever we go. Talk why. Well, what I think is interesting is I heard VCs tend to make plays in a chunk. So they'll kind of breeze through a field and place their investments, and they want to see mature, that whole 7-year cycle. So what I think you're watching right now is just those early plays come to maturity. And the next round aren't as novel, so the bets may be smaller. It may be more of a realistic playing field. So the hype may not go away, but it may become more normative. And I've never really liked the idea of insurance and insurtech. I just thought it was the digitalization of what was already there, which is kind of an inevitability anyways. So I see them as cousins, but I hadn't heard Nick's argument before that there's companies that don't touch insurance. I could see those being insurtech, but anybody who carries a traditional policy still being, quote unquote insurance, but a Tesla is still a car, maybe an electric car, but it's still a car,
I don't know. I'm not even going to waste my effort just trying to parse words, I just, whether it's a tech company building tech for the insurance industry or the insurance industry trying to, as you said, become more digitized, as one of our partners told us when we first got started, he said, technology and insurance is a very low bar, right? So anything is an improvement, anything. And I read, I don't know if it was LinkedIn, I saw somewhere where someone was talking about an insurtech company in New York State that's selling life insurance and how onerous it is to sell life insurance in New York. I don't do life insurance. All I keep thinking about is from life is that it's just an application and then you buy a policy. There must be a lot more. It must be a lot more complicated than I'm thinking that it is, and the state of New York must be making it a lot more complicated. So I guess my big point is that selling insurance, getting a policy in someone's hands is just really difficult. And whatever it takes to make that easier, to make the consumer more comfortable with the purchase, to give them broader coverage at a cheaper price. I'll go back to rubber bands and and old-fashioned accounting ledgers. I don't care as long as that sphere gets improved. I just happen to think that innovation and using technology is going to be the way that it gets done. Stephen, am I?
No, I would agree. I mean, we've all done our time on, I guess, the incumbent side, and trying to make things more innovative or more digital or whatever you want to call it within insurance is not necessarily new. I think it's just that there's more technologies that are available today and that are, that we're now figuring out how we can make these more a part of what people are already doing in their day-to-day lives. So I think it's really, I mean, like you say, anything that we can do to leverage what we're seeing today in these technologies to get people more coverage is great. I think the one thing that maybe not concerns, I don't know if concerns is the right word, is we're seeing ways to get people coverage faster. We're seeing ways to use data, collect data that allows us to fill out an application easier, give them a real quote, give them a real rate, whatever you want to call it. I think there's still a lot around the insurance literacy perspective and actually educating consumers on what they're actually buying. If I can buy a policy in 30 seconds, great. If I don't know what I bought, that doesn't really change the whole insurance system and moving that forward. So I think there's probably, we're making it faster, we're making it more convenient, we're making it more personalized. I still think that there's a lot of work still to do on educating consumers on what they're actually buying and what insurance actually means. And I want to see more of that. I saw Ladder Life recently partnered with SoFi to offer life insurance on their platform. And
by the way, that was the company. That was the one that I heard about, Ladder in New York, and how they're streamlining their processes. It must have been with this particular transaction to make it easier for people in New York State to buy life insurance, which apparently is just really difficult to do.
I wonder too, if you're kind of hearing a kickback from the older players, like the older brokers who have kind of a sense of self-import of being in the room, having the documents, they take responsibility on to take care of people. And then they see kind of the web swoop in and, you let people sign up for whatever. Maybe they don't think people are taking care of themselves properly. So there might be a little bit of ego in there. Like, you're just replacing me with an interaction on a screen. Like, you can't do what we're doing well. So that might be some of the kickback too.
Well, yeah, and that's where agents and brokers will say, and where I believe that they will still have a place in this overall insurance schema, for years to come, is because a lot of people, including myself, prefer to talk to somebody to understand what they're buying before they buy it.
Especially high value.
Yeah, every single one of my insurance policies that I have has been bought through an agent or a broker.
Yeah.
Because I want to walk through what I get, and I want to understand what I'm buying, and I want to make sure, that I get that before I just like click a few buttons and get a policy.
I've done it both ways.
Yeah.
So, there was a period of time where it was just like, I'm saving 15%, I'm going to go online. I'm going to do it myself. So I had a digital renter's policy. I had a digital auto policy. They were not with the same company. And then I moved across state lines, and I spent hours cleaning that up to get it to the new state. They don't just like change your address. It's a different company. They re-underwrite you, and they have to go through that process. So when I moved again after that, I was just like, screw that. I interviewed a couple of agents. I found one that I liked, and I said, here are my policies. I don't want the cheapest one, but just get me something that's reasonable and economical. Get me something that's like top ranked coverage for an economical price. And now I don't even think of it. Like Steven, I don't even have to call them anymore. It's just, I just send a quick email, and it's like, it's perfect. If I want to talk to them, I can. If I want to email, I can. But I've done it on my own, and I don't think it's all that it's cracked up to be. There's a lot of work.
Right. And if you don't know what you're buying too.
Yeah.
I happen to know. I mean,
Yeah.
I'm an insurance professional, so I knew exactly what I wanted to buy. But I would say someone that's new coming to this, they wouldn't have a chance trying to understand all that stuff that's getting thrown at them. It's really complicated purchase.
I mean, when I moved back to the States last July, first thing I had to buy was health insurance, because I'm now an independent contractor. I have my own business. I had to buy that. And I really tried to just do it all online. I was doing research. I was going on to Policy Genius. I was going on to all these sites. And even, the company I was working with in Malaysia, we ran the biggest medical portfolio in the country. And even after having run a medical business and a health insurance business for the last 4 years, researching all these policies, I was like, I got to go talk to somebody. And I talked to 2 people, and they gave me so much more information than I could find online. And this is, like you said, it's someone that knows that side of the business.
Yeah.
This year I bought my E&O for my consulting practice that I've never even touched in my life. So I had to go through a lot of different quotes and talks and online research. And so, yeah, I mean, it's,
it doesn't, Stephen, it doesn't make it perfect. Like, you brought up E&O. When we bought our E&O, I filled out paperwork. I filled out PDF forms. It felt extremely clunky. As I was going through it, I'm like, this is what Lemonade is talking about. Like, this is just ridiculous that I have to print out a form, fill it out by hand, scan it back in, send it to the broker. It was ridiculous.
You missed something, he's got to send it back to you. Then,
then I got a quote with just a garbled bunch of numbers on it. Like, there were a couple different options. I couldn't quite figure out. I ended up having to talk to him. I couldn't quite figure out what the, why is there a different number here, a different premium number here than in this section. It was terrible. It was a terrible buying experience. And if that's what the brokers are hanging their hats on, like, it's not only is the product complicated, but the applications and all of that. Those are brokers that are looking to have their commission reduced, because there will be tech companies that straighten that part out, the application process.
Well, when we talk about the tech enabling the consumer to move more quickly, I think the tech helping the brokers just operate more cleanly, just have, cleaner interactions, be able to spend more time with their customers, figuring out what they need. That's what's coming next, I think, is empowering the independent brokers or whomever else.
Yep. I mean, my quote was 146 pages. And
No, really?
yeah, I swear it was 146 pages.
How that's a book. How are
Yeah.
they? You have to study that. That's ridiculous.
And
So
and
go
sorry,
ahead.
my broker, she was like, all right, so here's the coverages on page 16. Now scroll to page 85 for the exclusions of those coverages. And I'm just like, how would I know this, right? So yeah, I think there's still tons of room for improvement there.
Maybe there's a business model for insurance nerds.
Oh, Risk Genius, I think, is already kind of doing that a little bit. The machine
Yeah, they
learning
are.
for the policy comparison.
Yeah.
Yeah.
Yeah. I'd like to learn a little bit more about what it is that they do, because from what I've seen and the demos that I've seen, a lot of it is just comparing it to other policies.
Yeah.
And I don't know, when I operate, I forcibly try to make my policy different than everybody else's policy. I don't want it to be the same, because then it's just a price game. Who's got the cheaper price, because everyone's offering the same coverage. So I don't know. That's complicated. One thing I did want to bring up, Stephen, I don't know if you're noticing this now, but I was looking at some of the funding that's going on recently. And you're right. I'm seeing fewer seed level investments. I'm seeing more of the mature companies that actually have revenue. So Series B, I think Metro Mile is doing like Series E. So they're almost on the verge of going public. But the one in particular that I saw was Cape Analytics. And I think they just did a Series B. It was like $13-14 million. And the thing that stuck out to me was I am getting deluged by companies that are offering something that's similar to what they're offering. And I don't want to pat myself on the back, but that's something that I was thinking about when the word disruption first came up. Was it's going to be hard to disrupt, because I don't think there's going to be a single winner. I think there's going to be a lot of companies. It's not a winner take all. And now you see Cape Analytics, who's a successful company. They're making it with strong backing. And yet there are a bunch of other companies that do stuff that's very similar to what they're doing. And now I see a lot of renters companies that are like Lemonade-ish. There's a lot of competition, which is kind of what I think what industry veterans were kind of predicting, because insurance is so big, you can't have that Uber effect. You're not going to have a winner take all. Have you noticed that, Stephen?
Yeah, that's a really interesting point, actually. And like you said, it's a multi-trillion-dollar market, right? If one company had the scale and had ability to serve all the insurance companies and brokers and agents and everything out there, I mean, bless them. But there's a big pie out there, and there will be some people that are doing stuff that's similar, and that's okay. I mean, look at all the insurance companies out there currently. Let's not even talk about the solutions. Just talk about the companies that are out there, right? How many companies offer life? How many companies offer property? How many companies offer auto? And they're pretty similar, and they're all still big companies, because people, need insurance, and there's so many people out there that are going to buy, and they're not just going to go from one player. So I get, unless like Amazon just comes in and swoops it all in, but I think that there's tons of opportunity, and you'll see some companies out there that look and feel similar and are still successful because there's a lot of pie out there to eat.
Yeah. Brett, when I talk about potential VC return on investment, to me, is insurance venture worthy? Well, if the VCs that are coming in are looking for Ubers, then the answer is no. But if they're looking to come in and looking to find companies that have a lower probability of failure, I think there'll be more companies that win. There just won't be any Ubers, in my opinion.
More
Thoughts?
like a private equity world and a VC world.
Yeah.
I just think there's 50 states, 50 different regulations. Everybody needs it. Plus there's templates out there. What you're trying to stand up. You kind of have to choose what hill you're going to kind of climb, but you can look at different models. Even myself just messing around with, Squarespace, Meetup, all these other different tools, even just to prop up something on the brokerage side, it's not impossible. So I think the the availability and the need across the marketplace. I think the model's been there before, and I think the fact that we pretend like it's one country, but especially in insurance, it's 50 states. You're going to have a lot of different, voices of the conversation.
Yeah.
But I still think it's just fundamentals, best practice, educate the customers, take care of them, pay claims. We're talking about a lot of new school stuff, but at the end of the day, build a good reputation.
Yeah.
Should be around for the long haul. But yeah, I do think it's more of a private equity than a VC kind of area. I still think there could be some big players, but
Well, interestingly, you mentioned that, Brett, and to follow up on your point too, Nick, 2 weeks ago, I had a dinner in LA with two founders.
Mm-hmm.
One is more of a, I guess, bootstrapped kind of angel invested company. The other one's trying to get VC money. I've got another buddy out in UK, another founder that's completely bootstrapped. And talking to the three different players, well, before I even say that, number one is all we see when people report investing is the VC money, right? So we don't see actually bootstrapped, startups being reported. We don't see angel invested startups being reported by, CB Insights or whatever. That's okay. But there's a lot of these companies out there that are bootstrapped, have gotten angel investors, and they're doing a lot of really good things too. And they're actually not feeling the same kind of pressure that the VC funded companies are feeling, because they've got a shorter time horizon for a payback period. Where I've talked to two founders, including the one that I had dinner with 2 weeks ago, that one of their strategic advisors is their first angel. And they see them kind of growing it, and they're like, well, we need to raise some more money. They're like, don't go to a VC. I'm going to get you some money from myself and some of my buddies, because we believe in this and we can help you grow rather than having to worry about that. So I think that's, something that doesn't really get talked about as much and we don't see as much. It'd be interesting to see how that plays out too, because like you said, Nick, if the VCs are looking for that big Uber company to invest in, that unicorn, yeah, they might get a few with some of either the full stack plays or the digital MGAs that we're seeing. But for some of the B2B type plays, they might not have that $1 billion valuation, but they're going to be around for a long time if they're really good and they can get some customers. So, that's probably some of the stuff that doesn't get talked about or reported as much, because frankly speaking, the data is not really out there for it, I don't think.
And I'm looking at it more from the broker side, just because that's where my experience has been. But there's also some low-hanging fruit revenue. You get licensed, you can start making some money in the industry. So it's not like you need a $500,000, $500,000 would be great, but like a $500 million war chest to go stand up a brokerage and start selling policies. So if they're looking at more business to consumer or B2B sales, there's gonna be a lot of people in that conversation. So,
yeah. Okay. Well, we wanted to purposely keep this short, so we have like a couple minutes left. I'm going to throw it over to Brett.
I just was spotting something kind of interesting. I pay too much attention to NBA, and I love that. And I see it kind of mirrored in the cooking scene, and then I see it mirrored in the entrepreneurial scene.
Did you say cooking?
Yeah. I'll listen to David Chang's podcast quite a bit. Loved Anthony Bourdain.
Okay. I am... Yeah. Dying to hear how you're going to connect these things. Let's go. Go ahead. Roll.
But I'm listening, but while he's talking, I need to get something if we're about to switch to NBA.
Yeah, there you go. So you can still hear us. People are having more of a voice than they used to. Our podcast is a representative example of it. Players are signing shorter contracts. It's interesting that before there was a big pyramid, you had the guy at the top with the information, the power, who got what role, who got whatever else. And then now, through initiative, through kind of ownership of your own situation, it seems like you're just seeing empowerment of talent across the board, where you need more collaborative situations, you need more buy-in, and I think it'd be a lot more powerful. I feel like there's going to be less sort of people kind of automatedly participating in stuff. I feel like the millennial group gets a bad rap for wanting to be invested in stuff potentially, but I think there's a little bit more of a holisticness and a little bit of a self-empowerment across the board, in different professions or different places of influence. If you're not punching a clock, but you care about what you do, I feel like it's a great time, to kind of level yourself up.
Yeah, we're definitely in interesting times.
Yeah.
Like, and I don't know. I'm not scared of it, but there's an element of it that I don't know, because I can't make it out. Oh no.
Just
Oh.
we're going to talk about NBA. I just need to make sure I got my.
Oh no.
Yeah, exactly. You brought the king to town.
Steven, do you think the Lakers will even make the playoffs next season?
I mean, of course.
6 seed. Yeah.
You think you'll
The 6th seed.
LeBron's going to come to Showtime and not bring us to the playoffs again?
Okay. So before we end this, I read something that LeBron was going to play center.
Mm-hmm.
To me, there's only one position on the floor where that position probably has more physicality than what LeBron brings to the table. That's center.
Mm-hmm.
And to me, that's like a recipe for disaster. Like, that's him getting injured. You know, that'd be foolish. I don't know. Steven, what do you know? What do you hear?
Well, I guess if Magic's the one that recruited him and Magic was able to play the 1 to 5, that was probably part of the saying, hey, you can do this as well.
He played the 5, though, in like only the most critical of games.
That was awesome. Yeah.
Details are, but I mean, we've got JaVale McGee, the Shaq the Fool, JaVale McGee coming over as our, big center, and that guy from Michigan that we just signed as well. I mean, if we have to put LeBron there, I guess, for some games, but you're right. I think that is not a good place to be.
Before we sign off, can we make a pact? If it's Celtics Lakers, we have to do this before every game.
Heck yeah, that'd be awesome.
Okay. Pact.
Sports podcast, 100%.
Okay. Fist bump. Okay. Let's call it an end. Let's get Steven to his tea time. Brett, you look shaggy. Let's get you to your barber.
Haircut.
Right. And I have
your new
I have this guy sleeping.
Yeah.
Right. And when he wakes up, I have this guy that I'm going to be bringing him to. So,
baby lamb.
So life has changed. Thank you for taking time out of your schedules to be flexible for me and my obviously contorted schedule. So for everyone that's watching, for Brett, myself, our guest, Steven Goldstein. Steven, how can people find you?
You can find me on LinkedIn, Steven Goldstein, I guess, on LinkedIn, or my email, steven@pivotventures.us.
Got it. I'll add that to the show notes. So we got the pact.
I like it.
Okay. For everyone at home, this has been the Attachment Point, the Roundtable Edition. For Brett and myself, see you next time.
See you next time, guys.
Okay.
Later.
See you guys.